Hello smart money traders, welcome back to the channel. It's Solomon King here. In this video I want to share something very powerful with you, and that is basically how to rightly select which of these ones price will react from. Is it an order block or a fair value gap? As simple as this concept is, it is basically one of the most difficult things that a lot of you traders are still facing, and I'm going to show you how to rightly do it in this video. I'm going to demystify everything to the simplest term for you in this particular video. What I'm actually saying is shown in this particular price action. Let me show you. Can you see this particular price action right here where my cursor is? Price actually moved from here to here, retraces back into this area. This is a visible break of structure that every one of you can see if I just mark it out like that. Now, a lot of traders will want to just wait for price to come to an order block, which is this particular candlestick, this one. This is your bullish order block in this regard. And then a lot of traders will want to take their trade right from here. And stop loss is mostly below the order block and your target is mostly above here. Okay. But at some moment, you will never see price reached out for the order block. It just reacted from this fair value gap, which is before the order block right here. This is a fair value gap right here that price just reacted from and then reversed in this direction. Now, this is one of the things a lot of you traders are still facing, whether to take trade from here. If you wait for price to come to an order block, it just reversed from here and then move away from your pending orders. And then sometimes when you decide to take trade from the fair value gap, which is right here, you expose yourself to more risks than you calculated earlier. Okay, so if your stop loss is supposed to be 10 pips, you're now giving it 15 pips, which is exposing yourself to more risks. So I want to show you how to rightly select which of these ones price will react from. Is it an order block or a fair value gap? So let's get into the video properly. If you have not yet subscribed to my YouTube channel, this is it. I have a lot of videos. You're not going to regret subscribing to this YouTube channel. Make sure you do that before we continue with the video. So let's get into proper explanation. Now, there are some basic things you need to understand about the entirety of ICT concept. It is summarized in 3 words: structure, institutional reference point, and then liquidity. Okay, so right here is an adumbration of everything I've just mentioned right here. You can see this is a visible uptrend that you can see from here to here. Anyone that wants to trade with this kind of information will want to see break of structure, retrace into an institutional reference point, either an order block or a fair value gap or a liquidity void that you want to take trade from. So right here, price actually gave us that exact thing, and then we have to factor in our time frame. Now, normally when I want to trade, I just use the daily time frame, 4-hour time frame, and then drop down to the 15-minute time frame, or sometimes the 1-hour time frame to take my trade. So if you go to the daily time frame and then watch the bias of what is happening right there, right here, you can visibly see that this is a clear uptrend. Nobody needs to tell you that the market is dominated by the bulls. And then this is a visible uptrend that everyone can see that is a bullish market. Now I drop down to the 4-hour, which is one of my strongest time frame of interest, and I want to watch price behave in this area. Okay, so this is exactly what I saw price doing. And then right here, let's assume this is what we are seeing price do. Price actually break outside this place, which we call an external range liquidity. Above here is where buy stops are residing, and this is where liquidity is. Price breaks outside it. We are waiting for price to actually come back inside to an internal range liquidity. This is a very good concept I've explained time and again. We can find this place as our point of interest where there is an internal range liquidity, or we can find this fair value gap as one of our point of interest. So this is giving us 2 points of interest. Price can obviously come to that order block or that particular fair value gap that I just marked, this one. Okay, now to even fortify our assumption, we can actually see that all the institutional reference point we just marked are located at our discount area, because this is important Above the middle line is called premium. Okay, everything here is called premium and everything here is called discount. So since we are dealing with a bullish trend, we want to always focus on the discount area. Anytime price comes back, if we find any institutional reference point right here, we give it more priority. So we will focus on this fair value gap and this order block. And now for us to get the detail in a broken way, we have to drop down to the 1 hour time frame just for us to get the detail of the retracement, because we are expecting price to obviously come back. I have taught this time and again, but I want to show you something unique about this. As price comes back, it may just react from this fair value gap, or it can even reach to the order block, but we don't know, obviously. So we will drop down to the 1 hour time frame and watch how price will come back. And that is where the wonder will happen. We're going to watch price behave and give us exactly what we are waiting for. So let's see it now. As price begins to retrace, okay, as price begins to retrace, this is the 1 hour time frame, guys. Don't forget, this is the 1 hour time frame. We want to see some kind of behavior that will tell us that we are aligning with an uptrend that we have from the 4 hour time frame and then the 1 hour time frame, because this is a downtrend, guys. This is a downtrend in the lower time frame. People are selling from here, and this is almost 133 pips, and then you can even go to almost 150 something pips. That is a lot of, you know, trade opportunity for people that are selling. But we want to see something like this. As price comes, we want to see price behave in this manner and then give us a shift in market structure before we want to take our trade. I taught a strategy that is very powerful. You can check it on my YouTube channel, Orderblock entry. I call it best Orderblock entry hack. It's a strategy I call Orderblock in an order block strategy. You can watch it. It's a very powerful strategy. So we are watching price come back, and we will patiently see how price behaves around these two. You see, as price is coming to our fair value gap, we can see some kind of, you know, difficulty as price is coming down. Please don't skip this video. I want to show you something very powerful. Don't skip it. I want to show you something. You can see now, look at what happened. As price reached this fair value gap, we have this break of structure, lower low, another lower low here, and then this is a shift in market structure right here, right at that point. Shift in market structure. Look at what I'm trying to show you. As this shift in market structure happened, that means we are no longer interested in the down. Look at the aggressiveness of this buy candle that came in, which is telling you that yes, the institutions are not interested in the order block again. They are interested more in the fair value gap. So this is what you watch out for. As price reaches your fair value gap, it reacted aggressively. Sometimes it can reach your order block, but this is reacting from the fair value gap. Now, if you come to indicators and search for this indicator called volumes, okay, this indicator called volume, click on it and then come to settings. I want to show you something very powerful, guys. If somebody taught me this when I was starting out, guys, I could have done a lot of things in the market earlier. Now look at this. Just change the color. Don't worry about the bear or this bullish, you know, candles. Just change the color. Look at what is happening. Do you realize that this entire retracement, as price was coming at this point, if you compare the volume is one of the most powerful indicators that doesn't show you fake price action. Okay, look at what is happening. Can you see a very drop down in the volume here? Right here, the volume has completely dropped down, which is telling you that this momentum of the sellers has reduced massively. It has reduced from here. As it comes to this place, look at the bullish candle that price printed. Compare the volume of this bullish candle, this one, and this retracement, which is telling you that yes, this is an indication that the bulls are here. The bulls are here. The big boys, the smart money are here. They are not interested in this particular order block. I'm not giving you stories, guys. You can go ahead and backtest and see for yourself. You're going to see this happening. The volume increased, which is telling you that yes, these guys are here and they are willing to take price to the next movement. Now it is with this information that you can boldly take trade. Okay, now look at what happened. As this candle printed, you know that the big boys and the institutions are back in the market, because you can see it from the volume and you can also see it from the candle that printed. So this is what I would do. I will look out for which of these institutional reference point can I see here. You have to train your eyes, guys, for you to know this. Look at what happened here. Can you see this institutional reference point here? Look at what happened here. To me, this is what I see. A breaker block. Okay, if you have trained your eyes to see this, you're going to see them time and again. This is a breaker block, and I shared some entry models with you in this particular video. Where is it? This one, top ICT entry models. You're going to find valuable lessons there. Look at this. Price came to this place, retraced back, came to this area, and then pushed up again. So I'm waiting for price to actually come to this place, just like what happened here from this sketch. I'm actually waiting for price to come and identify with that particular institutional reference point I'm dealing with. Okay, so I can say this is what I'm looking at. This breaker block, I can enter trade from this breaker block, guys. This one. Okay, I can enter trade from this breaker block, which gives me more confidence than any of those information you have there. This breaker block is my entry now. Okay, so if price is coming back, I want to see it come back to this breaker block right here, and my stop loss is here. I can target this place, guys. Look at this. This gives me less risks, and then it gives me the absolute best of this entry. So if I'm watching this, okay, price came back, took me in, and then head up to my target. Okay, so this is actually how to do this. 119 pips. Let's see what we're going to get if we drop down to the lower time frame and see whether we're going to get something bigger than this. If we drop down to the 15-minute, I hope we see a better entry. But look at this. Yes, in the 15-minute time frame, guys, there is something even better. Something even better. That's what makes it the best right here. If I adjust this for you to properly see it, this is where the entry happened. Remember, we have a market structure shift at this level from that time frame. Then price pushed above here. Okay, let's see. Okay, so we could have entered at this fair value gap right here. Why are we entering from that fair value gap? Because we know price will not go further than this. If we are to even give you the volume, you're going to see that the volume of this retracement is less, which is telling you that the smart money are not there. Okay, can you see the volume of these two candles is even lesser than the volume of this bullish candle? Can you see it here? Please, guys, get this correctly and you're going to get the best of this. So this is our entry now from here, right here. Is it bullish? Yes, from here. That is my entry, and obviously my stop loss, I can bring it to here, I can bring it down here, and I can target up there. From the higher time frame, this place is my target, and you can actually see that price took time to move out and give you the trade that you desire. So this is what happens when you use this information, guys. Let's see how it goes. It takes time, but obviously it will go in the direction of your prediction. There are so many entry models with this kind of information. I'm just giving you a tip of it. There are so many things I can teach you guys. I'm just starting out with you gradually. And then, guys, I have something to announce to you. I have created a YouTube channel for all the new ICT traders. This is the YouTube channel. I don't have a single video there. I want to make sure that all of you are there before I start posting the videos there. I will link it in the description. This is for beginners, complete beginners. I'm going to go through everything you know about ICT for beginners. The mentorship, this is ICT premium content. The mentorship month 1 to 12. I'm going to simplify everything for you. Charter school, and you're going to see ICT commentaries. These are some of the most powerful ICT lessons that you're going to learn right there. So make sure you subscribe. I'm going to put the link in the description of this video. So be fast, subscribe, and then I'm going to be dropping videos there for beginners, because some of the things I do here are actually advanced and a lot of you guys are just beginning with ICT. So I'm going to go with you through everything ICT 2022 mentorship, which is basically ICT's mentorship. So let's go and see if we can see another example. Then I'll close with this video just quickly, and I will close from here. Sometimes price can reach to an order block, sometimes it cannot reach. And you see, this is an example of how price reached to this order block. Price actually reached there. You're going to see times and again where price never reached to an order block. It just reacted from a fair value gap like this one. Price never reached to an order block. Price just bounced from this fair value gap. Even this one, it never even reached this one. So guys, go ahead and check it and see how reliable is this concept of entry. And if you have any question, let me know from the comments. Thank you guys for watching. See you in another video.